Hello and happy Friday, everyone. Hope everyone's had a great Easter. Welcome to the April 2025 edition of Payroll Question Time. The sun is shining. A heat wave is apparently around the corner. It's the new tax year. So let's forget about Trump tariffs and talk about payroll. I'm Steve Yardley, the Managing Director at JJ Recruitment, and I am your guest host this month because Nick Day, the effervescent Nick Day, is currently in the United States, in Austin, Texas. So welcome one and all. I'm super excited to be here on PQT and really sort of proud to be invited to field the questions, listen to the payroll community, and obviously pass those questions through to these great payroll minds and listen to their wise words. So thank you, everybody, and thank you to the panel for joining us. Loads to get through today. Always, it's your show, so please do keep those questions coming through. I'll be monitoring those as we go through and then pushing those back to this panel of payroll experts. Pop the question in the box and we'll get them answered as real time as we possibly can with me using this technology. So thank you for your patience. As always, we'll have two polls as we go through. So a really good opportunity to understand what you guys are experiencing out there, what your world's like, and any sort of feedback we can go through from the results of that as well. So two polls coming up as well. So panel can discuss those as we go forward. Right, moving through to a little bit of housekeeping before we get going. Anyone who's new to PQT, we can run through. As always, this is being recorded, so no need to be scribbling away all the way through. Not a problem. We'll send that through and everyone can have a copy, or you can see it. It'll be posted live anyway. So we're sharing the slides at the end. And as always, there is a survey. So if people can complete that, we can then use that as feedback. And for more webinars, we can then tailor that to those kind of questions and any areas within payroll that you would want covered. Okay, disclaimer time. I think we should call this "There's never one answer in payroll." But anyway, so the presentation does not provide definitive answers to individual queries, and in some places takes views on matters which are uncertain. It's not intended to be relied upon in any specific context or as a substitute for seeking advice, legal or otherwise, on a specific circumstance, as each case may be different. There we go. Okay, so let's get on with the show. Just a quick reminder, please do keep the questions coming through. I'll be monitoring those and then fielding those to the team. Tiny bit on me, because I couldn't waste the opportunity, but my name's Steve Yardley, Managing Director of JJ Recruitment. JJ Recruitment, if you didn't know, are a payroll talent specialist recruitment company. Recruit in the UK, EMEA, APAC, US. As I mentioned, Nick's in the US at the moment, working very hard. And I have been with JJA since 2008 when we started, which was obviously a wonderful financial time to start business. But in addition to that, I had to check this morning on my own LinkedIn, but I have been in payroll recruitment for 25 years now. So slightly terrifying for me. But anyway, that's a little bit about me. But more importantly, let's get on to our panel of experts. We'll go through these guys and let them give themselves a little introduction about what they do, where they've been. We've had a couple that haven't managed to get on yet, so I'll run through everyone who's here and then we'll take it from there. So I'm going to go with first in front of me, someone I've known for a very long time, cycled mountains with, all sorts of stuff, Richard George.
It's me, not Simon. That's got to. Good afternoon, everybody. Richard George, Director of Education at the Payroll Centre, the UK's largest face-to-face training company. I blitzed Steve at 39 years, but I don't quite hit Simon, who's a little bit longer than me, but not by much, sadly. So, always been a payroller, Reward 300, multiple consultation groups with the government, as is Simon, sitting next to me or standing next to me or wherever we are. And great to be on as usual.
Thank you, Richard. Always a pleasure. And over to you, Simon Parsons.
Yeah, good afternoon, everyone. It's great to be back for another edition of the Payroll Question Time. Simon Parsons, UK Director of Compliance Strategies at SD Worx. I actually joined Centerfile in 1984, so I think that's 41 years ago, isn't it? So, you could say if I've been there all the way since, I have had two small breaks in between, as this is my third sentence with what was Centerfile, then Ceridian, now SD Worx, all the same company. My background is IT, so I'm an IT developer, systems analyst. I came back in 1997 as chief analyst, but my specialism is in payroll software development legislation and its application into payroll software. So as Rich has mentioned, sit on a number of government panels, Employment Payroll Group, Rep Body Group, Statutory Payments Consultation Group, and various others with other departments. And it's a pleasure to be with you today. Very active in the arena of payroll knowledge and consultation with government, because without us, they make quite a mess, and with us, hopefully the mess isn't quite as bad.
Thank you ever so much, Simon. Hello, Margaret. But I'll come to you in a second. Robert Day. Robert Day is Associate Director of Employee Solutions, at S&W. So nice to meet you, Robert. Thanks for joining. If you could tell us a little bit about yourself, that'd be great.
Thanks, Steve, and thanks very much for having me today. Yeah, so as mentioned, I'm an Associate Director in the Employer Solutions team at S&W, recently rebranded from Evelyn Partners following the split out of our professional services business at the end of March. I've got over 10 years experience advising on all areas of domestic UK employment tax. So I'm not strictly a payroll professional, I guess, like the others. Yeah, sit much more within the tax world, but I am the payrolling of benefits in kind lead at S&W. And yeah, advise a wide range of clients from small startup businesses right through to large multinationals on all areas of domestic UK employment tax.
Amazing, thank you. And Margaret, sorry, I know you've only just joined us, so straight in. So I'm Steve Yardley at JJ Recruitment. We're just doing a little round robin about who everyone is and their background in payroll or their work background. But Margaret Selma, Senior Payroll Manager at S&W.
Hi, apologies for the delay. I hope you can hear me. I had a bit of a technical problem during the webinar. As you said, my name is Margaret Selma. I've worked in payroll for just over 11 years. I've joined S&W 4 years ago as an assistant manager, and now I am a senior payroll manager and manage a team of 11. My background, I am CIPP qualified. I've worked in different sections of payroll, starting from very simple, easy contractors payroll, weekly, monthly, bi-weekly, yearly, you name it. I've moved on then into a global payroll, stayed there for 4 years, and then joined S&W. Thank you.
Amazing, thank you ever so much, and thank you everybody. Incredible breadth of experience there, and thank you, Richard, because it's rare that I talk about the amount of experience I've got, and the one at the bottom of the so thank you ever so much. Okay, so let's move through to menu and discussion topics for today. Just a reminder to keep the questions coming through, please. I'm not sure if I've seen any come through yet. So, and normally there's tons at this point, I think. But anyway, if we look at what we're talking about, maybe they'll be coming through. So anything you want to discuss, payroll related, obviously, but anything, if it's not in these discussion points, that's fine. Just let us know where you are. Okay, so new tax year, it's April 2025, that would make sense. Payroll benefits in kind, I think this is a continual ongoing discussion point, ever evolving, and always more questions in there. So gaps consultation, it's quite a bit on that there. Tax advice market, April 2026. And of course, if we have time at the end, any hot topics and Q&A. And then the latest update from SD Worx Academy and training courses going forward. So I don't know, Simon, if you wanted to talk around the overview on this at the moment, where we are, anything that's popped into your inbox in the last 3 weeks, month?
Well, there are a number of topics, and I think they probably fit in with the new tax year type stuff. And certainly we're seeing this on social media and other challenges where the 15% rise in national insurance has hit people. We've had a number of requests I've seen where people are saying, oh, but this is March's working, paid in April, we should really be paying 13.8%. And there's an element of, if I'm a bit blunt, who do they think they're kidding? The king on national insurance rates and taxation is payday, not when you worked it. Slightly different maybe for national minimum wage, but certainly that's an area. I'll probably jump straight to the national insurance tag here, Steve. But that's one of the areas I'm seeing raised quite a bit. Is they're a bit squelchy on April payrolls because that was March's work being increased by the 1.2 percentage points, especially as they probably hadn't budgeted that in to their costs to their clients who they're charging work out to. And I'd probably say that was bad planning, probably on the accountant's side on what they should have done. But I think that's still very much an angst, seeing lots and lots of questions on employment allowance as well, which associates with that area of understanding who can or can't, because so many employers haven't been able to claim for the past few years because of certain types of restrictions on employers' national insurance levels and also on receiving funding, etc., and whether that breaches various types of other rules. But of course, with the employment allowance going up to £10,500, that's quite an offset for some of the smaller employers that are out there. So those are sorts of the initial thought I'd probably go in, and others would probably want to introduce or discuss. But I'm seeing a number of questions around the national insurance change and the employment allowance certainly coming in. Then that expands into national minimum wage, but maybe we'll take those. But last time I think it was asked about could we clarify rules on statutory neonatal care and pay. Quite happy to, and maybe that's a discussion around as well. Although I'd be surprised if anyone's had overly many cases. You may have done, but the first case is that it's possible that you could have statutory neonatal care pay would have only just triggered, because the trigger would have required a birth on the 6th of April, with the first qualifying from the 13th of April onwards, because you have to be in for 7 days before actual qualification. But we can go through that as a topic. I'm sure others will want to discuss in. So whether we want other areas of parental pay to discuss, let's consider that, and we'll take these one at a time.
Yeah, has anyone else got anything they'd want to add on parental pay there?
Well, yeah, I think neonatal is a key change. I think also it's people's perception and understanding of how it works, because it's very different. But try to make it as complicated as they possibly can in relation to understanding when the leave is used. So the rules generally are as they are for most things, where it's a day one right for the leave. It is the average pay over the LEL for the pay. But the principle for it, which makes it very different, is it is created through 2 tiers. The tiers being used as and when the individual wants to use the accrued leave that they've gained. Because remember, as Simon quite rightly said, they need to be in for 7 days. They then can have up to a maximum of 12 weeks accruing, obviously, per week that the child is in care. But if the child is in care or the first week after the care has ended, any leave taken in that period is classified under tier 1, which can be classified as an emergency leave, e.g. you've just gone and you've had to take it. So things like notification rules are very different, but also it can be taken in blocks of a week at a time. So there can be gaps, because it could be the example that the birth parent takes a full period while the partner may take a week, go back for a week, and so on and so forth. So there is a tier 1 process for the first period, but obviously that leave can be taken any time within the first 68 weeks. And therefore, once you move out of the actual care it then moves into this tier 2 arrangement. Obviously, it doesn't alter the 12 weeks, but it's then the rules of notice, etc., vary. So there is comparative variation to it. I guess the challenges will be people's understanding of it, or individuals understanding how to use it effectively. Because the instant view is they're in for 6 weeks, I'll take those 6 weeks off. That doesn't necessarily have to be the case with it. So I think there's quite a lot of education needed for people to truly understand how it works. So I guess that's quite key.
I think it kind of interferes with the maternity, doesn't it, Richard? So the mother doesn't get the statutory neonatal care pay immediately because, of course, SMP kicks in a day after birth at the very latest. So you then get into this element for some people. This leave entitlement is deferred to a future point when the baby actually isn't in care because it tags on the end. So it comes with lots of little complications.
Yeah, that's right. And I think that's obviously why it's 68 weeks, because that takes you beyond the likelihood of 64 weeks for a lady on maternity. So yeah, it kind of makes sense that way.
Thank you, guys. Any more on parental pay from anyone here, or should we move through to the national minimum wage? Or are we?
Yeah,
Well, I guess the only other real keys for small businesses. Obviously, we get our standard statutory increase under the instrument of inflation, which obviously didn't put it up much this year because September was probably the lowest inflation we've had. But it's more about the small employer reclaim. So from the 6th of April, that increased from 103 to 108.5. So a little bit more back for those little employers who have to be pretty small now to collect that one. But otherwise, it is carry on as we are for the moment, I think is the best way to describe it.
We get a flurry of questions in about the change rate point. And even the concept that well, actually the week should split, and the rules are the rate applicable at the start of the week is the rate for the remainder of the week, no matter when paid. So the rate rise applied to pay weeks coincidentally this year that started on the 6th of April because the 6th just happened to be a Sunday. Other years, the change point is different. And some people challenge that and say, well, you've got any day rights with statutory leaves. You do, but the change point is for weeks that commence on or after the 6th of April. So by starting a week on the 5th, you've actually got in an extra week of the lower rate that used to be rather than the new one. Yep.
Thank you. On that one, keep the questions coming through because I haven't had anything through yet. So I don't know. Everyone is super happy with all the answers. You're doing such a good job, Simon, Richard, or everyone. So thank you. National insurance, where are we currently? What's happening?
One.
Apart from employers are paying quite.
Yeah, well, the national insurance. Yes.
I was to say, Margaret, how are you, given you're actually payrolling? How have you seen it? What are you seeing from people?
Frustration from clients, I guess. We have been providing the information to clients, but we always refer them to the government website and obviously boards like CIPP for further advice. Things change all the time and there are different circumstances specific for each client. So we'd rather refer them to experts in those areas rather than really sharing. We do share general information, advice on those topics, but if there is a specific scenario, we'd rather refer it to advisory board.
I think something that I've seen from quite a few clients as well is not necessarily grasping that it's also an increase to the Class 1A and Class 1B NIC rates that are payable on benefits in kind. So there's that knock-on impact as well of the increased cost for employers sort of looking ahead to the sort of end-of-year tax compliance obligations.
Yeah, and I think there's quite a key thing here as well, especially possibly with Class 1B, where PSAs have been in place and ongoing for a number of years. It's understanding the change in, I guess, budget and cash flow for the costs that's going to become. Because obviously with the PSA, you're paying NI on the tax as well as the cost. So it's quite a big implication, Robert, as well, I think.
Agreed.
Okay, and then moving through to employment allowance.
I had another point I could add on the employment allowance. I've had a few questions come through from clients since last week. In particular, those that maybe weren't eligible for claiming the employment allowance previously because they were a large company, and whether they can claim, or whether each company within the group can claim, or whether it's only sort of one claim within a group of connected companies. And the simple answer to that one is, if you're connected to other companies, there's only one company within the group that can make the employment allowance claim. So hopefully that clears that one up nicely.
Yes,
Thank you,
and
Robert.
I guess the fact that the limit of employers who can claim the employment allowance is seized. So as long as you fit within those criteria, clients are desperate to claim and reduce the PAYE liability for a year, which does help a bit with the cost and running the business.
I think I think Simon will probably agree, but obviously on our help desk, pretty much any question about this is about the connection, because people just haven't had it in their thing. But I get the easiest way to think about it is the likelihood is, if you haven't been able to claim this, you have been claiming the apprentice levy allowance, and the rule on connection is exactly the same. So if you've only been getting one of those, you're only getting one of these as well. I guess where the key difference is, though, is you can split the apprentice allowance between the codes, but I don't believe you can, obviously, with the employment allowance. It is a single claim against a PAYE reference. So there is a difference between the two, which again comes up quite a lot. We divide it over 6 different connected businesses. Well, good. Well, you can't with this one. It would be a single claim. I presume my time against an employer's liability.
Yeah, and I guess on these two subjects, the other audience that quite often you see the questions asked about are director companies or director-only payrolls. And so this year, the director-only payrolls, of course, been hit by the £5,000 secondary NIC threshold, triggering a contribution. I've seen some strange questions and strange proposals that are trying to, in effect, avoid paying any national insurance, I guess, whereas before it was a £9,000 odd value that triggered it. But one such question that's got circulated around recently is that the directors are paying themselves a single value, which triggers no employee contribution, or probably doesn't even trigger a secondary threshold each month, and then a big whack for 1 month, possibly on the principle of they think they'll only have a liability for 1 month, because being director payrolls, they'll have a 12-month liability in that month, because at some point in the year it has to revert to the annual principle. And is yeah, so there's going to be lots of noise on this, I think, because the effects of the increase in costs are now coming through.
Very much so. Very much so. Thank you, guys. Moving through to workplace postcodes, when and why? Who wants to pick that one up?
Yeah, I guess this relates to national insurance as well. So those are all sub points. We'll go back to national minimum wage at some point as well, Steve. I think there's some things we can discuss around that. The workplace pensions is a new requirement on the RTI filing. So if anybody's operating in a investment zone or free port, I think there's been some question of whether the people actually work there or not, that the NI relief is being applied to. So there's a new requirement this year that the workplace postcode must be reported on the submission to HMRC against the individual. Hence the reason for that. So there's a change in requirements again in national insurance operation. Freeport and investment zones been around for a number of years, but this new requirement of workplace postcode is new. What I'm also seeing is a lot of software has been written to report workplace postcode for any category letter, which seems odd. They've either misunderstood the requirement. However,
Yes.
I've not heard that the data is rejected, but it may appear very strange because the workplace postcode is only for those working in investment zones and free ports. I think you got some experience there, Richard.
Yeah, we've had a few people come to us where their solution is made mandatory. Obviously, it won't reject, and I don't believe that even if you don't put it in, I'm not sure what the actual RTI output is, whether it rejects if it can't find one if you're using F. But we're certainly getting stories of software having a mandatory requirement to complete the field, where obviously, as Simon quite rightly said, it isn't mandatory unless you're using FISLDEKRN. So,
Question just in, going back to employment allowance. I wasn't sure if that was in at the same time, but I'm obviously just whipping through too fast, so apologies. But a question for the panel, is the employment allowance claimed each month, or if not in place in April, can be set up in May? 2 months will be claimed then monthly from there. Ask us right now, I'm currently not sure.
no, so it is a declaration, and usually it's a tick box on the EPS, and it can be declared in any month of the year. Principally, it will then work until the employer's NI has been reduced by the 10,500. So it could be in 1 month, it could take a number to clear. It was very commonly used by small businesses, for instance, to consider against cash flow. So if you had, for instance, an expensive month with, say, a bonus payment within it, which therefore increased your NI in August, you would get people strategically registering in that month so that it would have obviously reduced their cash flow. So it is down to the business as to when they claim it within the year.
So potentially with the employment allowance, if your NI bill in April is £10,500, employer's contribution, your liability is zero, because it will give you the 10.5 immediately. If you don't do it and you do it in May, it'll hit then on a cumulative principle. So it wipes out that 10.5. So as Richard's suggesting, if you left it to August, it'll knock it all off in August. But if your NI bill isn't high enough, it's only £1,000, you'll only in April, you'll only get a £1,000. You don't get 10.5. It kind of builds up through the year until you've got to those sorts of levels. Which is different to the apprentice levy offset allowance of 15,000, which works on a monthly cumulative principle unless you make a declaration that your annual pay bill is going to be under 3 million for the year, in which case they allow you to offset the 15,000 potentially immediately on a cumulative basis. But on the general principle with apprenticeship levy, you get 1/12 of the share building up. So month 1, 1/12, month 2, 2/12, month 3, 3/12. But again, if you say last year our pay bill was under 3 million, this particularly works for seasonal type businesses that may have more than a 12th of 3 million in summer months, but the rest of the year is lower, to be able to offset any liability, because in the end it could end up that you're paying app levy and then it's all refunded back up through to March, and so it prevents that sort of activity. So interesting times. I'm sure we'll keep on getting app levy and employment allowance type questions, especially around the connected business type aspect. Yeah,
You're quite right, Simon, because there's another one just come in. So, but this is sole trader with 1 employee. Can they claim EN?
Well, it depends. If directors, certainly not. I think in this instance, Richard, are you the view that they can actually claim it if it's an employee? If they've got another employee, they can claim it.
Yep. It's as long as it is an employee and it's not just a director, then I don't think there's a problem with it. But it has to be employees. I think that's really the way to look at it.
Yeah, 2 directors, you can claim it, but not 1 director.
Okay. Thank you, guys. And Simon, I think you said you wanted to, there's probably more to cover on national minimum wage. So if anyone's got any questions on that as well, send them through. But I think, Simon, you wanted to sort of regroup on that one.
Yeah, sure. I'll tidy up a little bit on the reduced rate, and we can go back if that's all right, Steve. But on the reduced rate, because I guess it finishes off the national insurance, there's a new requirement. Why they brought it in this year, I don't know, but I presume there are some old fables and traditions that happen. And the regular one used to be, what national insurance letter am I on? Oh, it must be the last digit of the national insurance number. It says B, so I'll put myself on NI letter B. So I presume the government are experienced people claiming reduced rate national insurance for married women and widows, which of course ended in the 70s. So there have been no claimants, but there are still some people out there that qualify for it, that haven't been divorced or are widows and still working, that can get reduced rate. But from April this year, there's a requirement to actually report the date of birth, I think it is, against the reduced rate NIC category. Have I got that right, Richard? Or is it the date of marriage? I can't remember now. Should look that one up.
Or is it the date of certificate?
It may be. Yes, it could be. Let me have a look. I'll have it somewhere here.
CF383, I can't remember off the top of my head.
Yeah, but there's a new requirement to report the dates against those NIC letter values from April. If not, you will find your FPS file rejected if you're using one of the reduced rate codes. That's just a thought. So new requirement, something we didn't have before, now needed. That population actually expires in a couple of years' time. So we'll have it at a point where there won't be any that are contributing national insurance, but I think it's got about 3 years left on it. National minimum wage wise, yes, I think it was just again lots of questions on national minimum wage coming through and what qualifies, especially as this impacts into benefit world, especially when implementing salary sacrifice schemes. And I've got a lot of stuff being raised about the concept of cancelling the salary sacrifice and changing it to a deduction, etc. instead, because the salary sacrifice will take people below national minimum wage. There's just an element of be very careful, because buying a benefit off your employer also reduces national minimum wage pay. So it doesn't fix anything. So if they're part of a bike scheme, getting a bike loaned to them by their employer, and the salary sacrifice now takes them below, so you now change that to a deduction instead. Who are you paying that deduction to? You could say, well, that's a third-party company, but it's an employer scheme. So actually, you're paying the deduction to the employer. Therefore, that reduces national minimum wage also. So you actually haven't avoided a breach at all. And so it's a principle of you can't keep on changing what are free employer-provided benefits, getting successful tax and NI reliefs to deductions instead, because they're buying an employer-provided benefit that will reduce national minimum wage pay in just the same way. And now they've paid tax and national insurance as well. So you haven't solved the problem at all. So the other aspect, I guess we've talked about occasionally, is there seems to be some promoters of some, I would suggest, fake salary sacrifice schemes. So they're trying to promote salary sacrifices that don't really work at all, trying to claim they're approved by HMRC, etc. Who I think HMRC will probably say, never heard of that one before. But the exemptions of the OPRA rules are quite limited: childcare, bikes, car parking, pensions, etc. A few others. So it's just going back over national minimum wage. That's probably quite a challenge. We've obviously got the £10 rate for 18 plus now, and 12.21 for those 21 and above. It's be prepared for 26, because the intention of the government is to align the adult rate so everybody gets the same. So we had that rate originally for older ages starting to drop, and eventually I think we'll find the 18 plus will rapidly close the gap and become the living wage.
Thank you. Any other points the panel would like to raise? I haven't had any more questions on these ones, so I think you're doing an incredible job, obviously, but if anyone wanted to cover anything else on the new tax year before we move on to the first poll.
Not in relation to the context of legislation. I think it's going to be more, obviously, as Simon said earlier on, it's now hitting people. So, you know, it's going to be very interesting, I guess, once we get sort of through the sort of first quarter of the tax year, the true implications, not only financial, but obviously your area, Steve, you know, what's it going to do with staffing? Because people have got to find the money somewhere. So I think it's going to be a very topsy-turvy couple of months.
I was at a leadership panel just as the mini budget came out. So I was in Westminster, and it was you know, it was more of a think tank really. But there were a lot of people that were having interesting discussions around recruitment, and I think for us, you know, we'll go on to this in a second because the poll's coming up and it very much looks at that. But I think it's about people making conscious decisions. But however, at the same time, we all know here, and I think everyone who's on this webinar knows that payroll talent can be particularly hard to find. So it's not always something we at JGA experience. However, in the broader commercial world, there's definitely a process of change going on at the moment. And, you know, are we, you know, spending longer to make sure we get the right person? I think that's not a bad thing, but yeah, the next poll will probably cover that off and see what our audience thinks about that as well.
I think also, Steve, it's the net cost to the individual anyway. You know, a number of very high profile brands are saying that they will pass the cost on. It's almost like a mini tariff, if you want to call it that. But, you know, there's some been very vocal, hasn't it? The likes of Lush and various others, Quick Fit, and a number of other companies have gone to media to say, you know, we're not picking up this cost. So I think it's multifaceted, the net effect of this. So as I said, I think it's going to be very interesting to see where it ends up.
Yes, yeah, I do too. Yeah, so I'm hoping we can move on to the poll so I can go through those. Because the questions would be, well, the question is to the audience, and we can respond to this and continue that conversation, was how has the new tax year affected your recruitment strategy? Fairly simple answers here. Downsizing, remaining the same, or looking to recruit more. So if people can vote on that, that would be great.
I guess there is an element of does the international trade war that seems to be affect as well. So you've got the national minimum wage hit, the national insurance hit, and speculation of what's going to happen with world trade.
Well, you've got that, but you've also just had corporation tax land for everyone for the first time, the increase as well. Sure.
Yes.
So that's 5% extra, isn't it? So, and as I alluded to, we've not spoken to talk about, but Donald Trump as well. But yeah, I don't know if anyone else on the panel's had an experience with their clients in that sense.
Nothing from me, I'm afraid.
Nothing at all, no. Okay, fine. While we wait for that, I hadn't had any more questions come through, so I'm just waiting for these poll results to come in. Our experience here, I suppose, at JGA is that, I mean, if I looked at our last month's job take, and that was up. So as far as we can see in payroll, which is good for everyone here, it hasn't had any effect at all, but that's our world. So, and obviously, if we look at the results here, I don't think it's landed really, if you look at it. You know, it is new. Yes, we're beginning to see it, but most people are, there's some downsizing. No one's recruiting more, but a very high percentage are remaining the same. Any thoughts on that, guys, before we move on?
Yeah, I think you're right. I don't think it's hit, and I think also it's the last thing you want to do. So, I mean, if you change the question to is it affecting your cost, and is it affecting your spending, I think you may have found probably a very different answer, because it probably is far more so. But as I say, it's so early in the process.
I couldn't agree more on the costs, because that's what you can project and you can compare, you know, from my experience. But yeah, I suppose decision making on recruitment strategy is a broader piece, and that will come into it. But and also, as I say, you know, in my experience and our experience at JGA recruitment, the roles, you know, a lot of the roles, most of the roles we recruit for they're required, they're essential. So there isn't any sort of hiding ground in it. I think differently, and maybe possibly in, you know, not my sector, but like marketing and sometimes sales, those usually take that impact first. But yeah, so I don't know if anyone else had anything to add before we move on. We'll be moving on to the hot topic, as always, which is payroll benefit in kind. I don't know if anyone wants to take a lead on this with employer options for 2026.
We're still waiting for final confirmations and design to be released from HMRC, as far as I'm aware. They did indicate there'll be an announcement in April, but time is running out. But we do know at the moment that the proposal, as in the public domain, is that mandation of payrolling occurs from April 2026. And we also do know it's going to be slightly different. We don't know how different, but there are some aspects we know, and that's currently the two restricted items that you can't payroll, which is accommodation and beneficial loans. There will be an option to payroll them voluntarily on a predictive and corrective basis. The reason we say predictive and corrective is you don't know the rates until the year is pretty much finished. So you can't really payroll them in real time because you don't know what they are. And I think that's been recognised, and that's why they've got this volatility arrangement, so that potentially being introduced, so that you can do something and then correct it. But the rest of them, there's this expectation of a real-time, accurate calculation of benefits through the payroll. So it's interesting times and seeing how that progresses. Now, lots of employers, lots of our attendees probably have decided to go ahead and go with it for April 25. I think that's reasonable. It's a good test year for many. Of course, others have been doing it since voluntary payrolling was introduced in April 2016, following the Office of Tax Simplification proposal to allow voluntary payrolling. Before that, the arrangements were all under the table, as it were, or under the carpet, hidden arrangements with local offices, and all sorts of practices happened. But those were all ended when the formal voluntary payrolling came in 2016. That's all I'll say at this point. I'll come back in at various points, Steve, and others may want to chime, but there is meant to be an announcement on the policy progression from the various ministers responsible for it. I'm not sure they've actually announced anything yet.
I've not seen anything. The last I heard sat on one of the large professional service firms' calls, sort of scoping what the landscape was going to look like. HMRC was saying the draft legislation would be coming out sometime in the summer, but they wouldn't be held to when in the summer that might be. So I guess we we all wait with bated breath as to when that further guidance might be released.
Well, hopefully the summer's this weekend, because so far it's been fairly chilly, but we'll see.
If anything's to go by, next week does look good, but I think that's overly optimistic.
Yeah. Well, the software development community have volunteered to be involved in the co-design, because there is a co-design that requires software, but we're running out of time is the challenge. It's got to be soon, otherwise it's going to be very difficult getting things ready for April 26th.
Well, it is the last Friday of the month, Simon, so it'll probably be about 4 o'clock this afternoon. So
or it's usually 6, isn't it?
I think there's a few, we meet a lot of people who are involved in this. I think we've already put sort of 250 people through the standalone course on it. And I think it is a number of key preface here. I think it's just the change in work process and possibly the change in team doing it. If you think about a lot of the accounting bureaus, even the payroll bureaus, it's often a standalone team or a tax advisory team who've had the history of this process. But I think also the complexity. I was with a very large car retailer, and their RP11D process is enormous and very complicated. And it's getting all the information and so on and so forth is where I think the largest scare is at the moment. So it's a very open-ended thing, as Simon said, on the grounds that we just don't know enough. We don't know enough about the double taxation scenario, or if they're going to do anything to alleviate. We don't know about year ends, because for a lot of employers, it's going to be an incredibly tight turnaround with a possible almost month 13 requirement. We know very little about so much, and also the other key aspect, and this probably gets the most, I guess, concern, is the whole area of the 50% tax limit, which can obviously be very quickly breached with enough benefit without the ability for that ever to be reclaimed through the payroll. And again, it's very easy at the moment. You get a P800, you ask for your coding to be amended the following year, but you're just kicking the can down the road possibly. So there's a number of fairly key aspects, I think, that are very outstanding, that we just need to understand what direction they want employers to take. Because it's going to be hard to communicate some of this, and that's going to be the key aspect. It's support and communication of the staff where the effect is going to occur.
Yeah, I couldn't agree more, Richard. I think that is absolutely critical to successful implementation. It's sort of fully informing employees of what the change is going to be, moving away from the P11D process to the payrolling of benefits process. And the common questions that employees are going to ask around, how does this impact me? Are there going to be any differences? What do I have to do for my tax return? Items like that. And I've seen from assisting quite a few clients, where they've actually effectively and clearly communicated to employees what the changes mean. The implementation has run much smoother than others that have taken a bit more of an ad hoc approach in sort of communicating to employees, or maybe not so much, and then having to field lots and lots of questions when it appears differently on the payslip and employees don't understand what is happening. So yeah, I can't stress strongly enough how important that is, and it's an HMRC expectation as well, as part of payrolling of benefits, that employees are sort of fully informed of what the changes are ahead of them happening.
And I think for Simon's world of software is what exactly is that software going to look like for next year, because it could be fairly dramatically different depending on provider as to what road they're going to take. Is it going to become a separate module? Because remember, we've got to deliver granularly the information required for the individual each year on a payslip. And if you've got multiple sacrifices and now you're going to add multiple benefits, how many pages does that payslip become? It could be a very good question. So I think the challenges are huge. And as I say, every company has a different challenge and a different story. And so, Margaret, I'm sure from the actual delivery side, there's a lot of concern out there.
Indeed, luckily, I mean, we between our team payroll and Robert's team, we have managed to offer payroll benefit going through the payroll from this year. So I think all the questions and worries are ahead of us. We've not had any like major issues or questions around the layout of the pay slips and etc. But I guess that is a bit too early. It's only just the first month, so watch the space, I guess.
But I think there's and you've got the word double taxation at the bottom. There's also an enormous fear around this whole area of the double taxation. In the majority of cases, that would already have been happening, and it is already happening, because double taxation, for all intents and purposes, is created by a reactive P11D creating an underpayment, and real-time coding adding on to that, therefore, the adjustment for the current year. Obviously, the key difference is going to be that reactive area, especially initially, is still going to be seen in the code, while the active period will be removed from the code and will become PAYE-able. So you suddenly have a situation where actually it's exactly what was happening, but it's now looking very, very different to the individual. And I think, again, a really tough piece of communication to make them understand, look, that you'd have been taxed it anyway. It's just the effect of it. There will be people that will be wrong, no doubt at all. You've got to think about currently today, we are voluntarily registering to payroll. So we're pretty much telling HMRC who are the people you've got to look at the benefit that they've got and adjust the code. That won't be required when it goes mandatory. So I'm guessing it's going to be down to HMRC to pluck out all of the benefit adjustments on all of the codes for everybody else. And obviously that's going to go well. I said that with a straight face. Did you like that? It's one of my
You did well there, Richard. Did very well.
Yeah. So you're going to have people double taxed.
Yes.
You're going to have people joining companies who, for instance, were P11D'd with the previous company, moving to a new business who are payrolling the same benefit. The P45 is going to have the wrong code on it. They're going to be double taxed. So there's going to be a percentage of people where this is going to be very ineffective initially. It could mean, again, as part of the communication, bridging loans possibly, or financial support. So I think it is an enormous, I guess, area of consideration for employers currently, and we just don't have enough guidance yet, obviously.
But I think all the things that Richard's just talked about are a major justification for payrolling in the end, because once this is all in, all of that disappears, because that's all a P11D problem that's inherent and goes forward, certainly for new starters. So hopefully for those that have had benefits for a long time, transition into payrolling is a no change position, except your tax code looks a lot healthier than it did before, when so K codes may revert to L codes, L suffix, etc., because the tax is removed from the code because it's now being collected in the payrolling activity. But I think there is this little bit of a fear that payrolling benefits brings the double taxation hit. It doesn't. It's the legacy of P11D that brings that in with it. But equally, when we've all gone fully payrolling, when we change jobs, the tax code won't reflect the coding for benefit recovery, except maybe for those under the 50% limit, Richard, where they couldn't collect it all. And that's going to be reflected some way in moving over. But maybe that's right. Don't know. So it's an element of seeing what the experience is like. But I think there's an element of when people go into payrolling, they think it's going to be the same as P11D. It's talking about the same things, but it's not. It's different, because the P11D is looking back at historic fact. whereas payrolling is looking forward to theoretical things that will happen but may change, and the world changes all the time. So it's very much prediction correction. So you could say that's talked about for loans and accommodation. That's because the prediction correction is a has to, whereas other things it doesn't have to, assuming we have a constant world. But we don't have a constant world. So where there's change, there's still going to be prediction and correction activity. Or maybe it's not prediction, it's factual and correction when facts change. So it's all that to look forward to. The major challenge that P11D services have now is getting the credible data in time for the submission deadlines of P11D, which is after the tax year end closes. With payrolling, you need that data before the tax year starts, never mind 14 months later. So there's an element of, are the benefit providers gearing themselves up to the fact that they've now got to prepare the data 14 months earlier than they've ever had to before. Plus that then goes into, well, if you've got 10 benefits for an employer, you're not talking about 10 stakeholders, sorry, one stakeholder. Often you're talking about 10 different stakeholders, 10 different suppliers. So the lease company is different to the medical benefit, is different to, I don't know, the health screening, is different to bikes, is different to childcare vouchers. So not that childcare vouchers have to be returned on P11D or payrolled unless they're above the statutory free limits, in which case they do. And then you've got all these theoretical schemes that are being launched by people which don't really work, with non-cash voucher provision, which is still subject to Class 1 national insurance, not Class 1A, and that you've got to think about. So it's just knowing all those different handling. All that data will be needed up front in April 2026, whereas before the suppliers didn't give it to you until May, June 27. And so it's changing that whole cycle. And I'm not sure if they're going to be ready for it. I think it's a struggle with voluntary now, but we're okay because voluntary payrolling is a bit of an experiment, isn't it? And we'll get there in the end. But when it becomes mandatory, what is the penalty regime going to be like for all of this stuff? How closely is it going to be policed? How under the microscope are things going to be looked at? Because increasingly the government are in a position where they're scrambling for money. So you've talked about the other changes, Steve, today. Now, all the announcements are out about landlords having to do returns and other sorts of things. Letters of people with more than so much in their bank account. They're going to get letters reminding them that they have to pay tax on their interest that they're receiving. There's an element of the world's becoming really complicated with it. Hopefully, payrolling itself is a simplified activity in theory, but is the world around it that has to feed into it all prepared? And payroll will be collecting that data from multiple sources where there are multiple benefits within the organisation. Should I get off the soapbox now?
It's interesting to run. First point first, we're going to go to a poll that's asking where people are on this, by the way, next. So just so you know, so we can get a temperature feel. I've got questions waiting as well from the previous piece as well. So I'm juggling slightly, but I think it's interesting on the tax on savings as well, particularly the level and how more and more people are going to be coming into that. So that's another point, but I'm not going to get on my soapbox, Simon, but thank you. So poll before while we let that run, I've got a question that's going back on to cycle to work scheme. So question, what is your status around benefits? So everyone out there, please let us know. We've got a good few of you on here, so it'd be a really good poll. Payrolling everything, payrolling some, and still using legacy. So if people can start answering that, that'd be really, really good to know from what we've just covered there and see where people are. So question for everyone here, really, if you can help on this one. We have a cycle to work scheme where an employee has reduced below NLW as of April 2025. Have you got any suggestions on how we deal with this if moving a net deduction doesn't solve the NLW issue? to the panel.
Yeah, well, the HMRC publish guidance on what an employer does, and the guidance is to cap. But so you cap and recover the monies that you can. And the other elements that many will do, I'm not saying that's HMRC guidance, is they'll extend the life of the recovery point through the salary sacrifice arrangement. But if you're providing a free bike as an employer to your employee, and you change that to deduction, that deduction is going to the employee. Whether it physically does or not, it's a different matter. The arrangement is that it is. So it will reduce under Regulation 10 the earnings for national minimum wage purposes. So it doesn't actually change anything. And you've also got that implication to think, what do you do when people go on maternity leave? Because maternity leave, they're entitled to continue to receive all benefits that they received prior. But if those were facilitated by a salary sacrifice arrangement, you cannot salary sacrifice statutory maternity pay. Well, some will say, well, that's earnings are reduced. It is earnings for taxation purpose, but it's not earnings from employment. It's a statutory payment, even if part funded by the employer. It's a statutory payment. So you can't sacrifice a statutory payment. So difficult times, difficult choices. I think there's an element of people may have to review their salary sacrifice arrangements, because you shouldn't be entering contractual reduction arrangements with people that can't. And you'd find yourselves potentially facing possibly criminal activity. The only concession with salary sacrifice and national minimum wage reporting is the government's current stance is they won't name and shame people where breaches occur because of salary sacrifice. So that's the only sort of, you won't be publicly castigated for doing it.
Although, Simon, that's only on the first occasion, though, isn't it? If
Yes.
HMRC come and do a re-inspection and the same issue arises, then that would lead to potential naming and shaming.
Exactly. Yes.
Thank you, guys. I think the
I
poll's
guess
still running. So
I was going to say other areas of sacrifice that can obviously cause issue is intangibles like holidays. You know, somebody may sacrifice for the value of 3 extra days holiday. They've taken the holiday and now their salary for some reason dropped so low or their rate's gone so high that they can't now have the sacrifice deduction. So I think there's many sort of scenarios where it's pretty tough going.
Yeah.
we've got our results in here. Hopefully, if I can see, it's pretty much split, isn't it?
It's really, really interesting. Yeah, maybe that's a good status so far of saying. So, yeah.
Yeah, it's very interesting to see. I think that sort of fits quite well with sort of my client base. I know some of mine were in the view of, yeah, let's payroll everything so that, you know, we can get used to sort of the systems and processes that need to be in place ahead of it becoming mandatory from April 26, and for employees to get used to, you know, the real-time impact of the tax being collected and shown on their pay slip every month. And then there are others that are saying, okay, let's just test out the system. Let's do some of the simpler benefits, such as just private medical insurance, and leave some of the more complicated benefits, such as cars, you know, until it's mandatory in April 26. And then others that just put it in the too hard bucket, or there are other business circumstances going on that meant that April 25 wasn't the right time to sort of test run under voluntary payrolling. So yeah, it's interesting to see how even that split is.
I think also it's probably a different percentage to if you'd have asked 4 months ago, because a lot of people, I am sure, have at least started payrolling for 25, 26. We certainly hear huge amounts of individuals who are trying it out now, because we were at around 50% legacy at the end of last year that we were seeing. So it kind of makes sense now that that legacy has reduced to a degree as people have started payrolling for 25, 26 for the first time.
It's probably worth adding. I've had a few people ask me this as well, that you know, okay, we missed the deadline to voluntary payroll for 25, 26. You know, can we just start partway through the tax year? You know, and really, you know, the message there is if you haven't voluntarily registered for payrolling ahead of the 25-26 tax year, you should be waiting until April 2026 for it to become mandatory to start payrolling, but start getting your ducks in a row for what you'll need to do ahead of that deadline.
Yeah, there was a slight alteration to that because it keeps coming up with us. New ones is the big question, and we've had it a lot. So we are going to start, for instance, private medical in October this year for the first time. We have no history of it. We've never returned it before. Can we payroll it from day one? And the answer for that one is actually yes, because you do put a date available within that voluntary registration. So for new benefits starting, you are still eligible to voluntarily register to payroll them as long as you haven't had them before.
The other change that's come in, I guess, is the fact that prior to this year, only an employer could register. There was no ability for anybody else. And when you've got a large client base around the world, etc., quite often they're wanting their payroll supplier to be able to do some of that activity for them, depending on what their registration capability is under tax advice markets, etc., which we can maybe talk about sometime. But from this April, you could register for 25-26. Agents can register their clients for payrolling, which previously was unavailable.
But there's a restriction, Simon, because I didn't know until somebody told me. They can't omit. Only the employer can omit people on the registration.
You only want to do half the job, Richard, don't you?
So I was asked a question, I didn't have a clue. I won't lie. But yeah, it seems agents can't cherry pick, but the employer can.
Yeah, I would say I sit on the Agents Advisory Board at HMRC, and I've got to say the common theme on most designs of their new systems is you can't keep on putting out new capabilities to the taxpayer without actually making it available to their agents. Because it makes life really difficult, and they have done that a number of times where they've introduced new stuff firstly to the end user without allowing the agent to do anything. But going forward, especially when you think of the inaccuracies that occur and you need professionals there to help assist, you need to think agents or combined at the same time rather than just thinking of the end taxpayer.
Thank you, guys. I had questions come in, but if we move through, because I'm mindful of time, because I think the next slide, I mean, that was all very interesting, so I appreciate it, but it's new gaps consultation, which we can talk through. There was, again, I think as you predicted, Simon, more questions on national minimum wage. It seems it was quite a few slides ago. You are the soothsayer. The question was, if a net deduction is for a private medical, dental, health, cash plan for family or increased level of cover not covered by the employer, will this impact national minimum wage?
Well, I'm going to say yes, because it's being facilitated by the employer as part of the employer scheme. But if it's a net deduction for an extension, you can reduce the benefit value that's declared, because that's an amount made good. But any deduction that goes to something provided by the employer reduces national minimum wage is just a suggestion under Regulation 10. Now, if it's truly to a third party, that's a different matter. But in these cases, if you're facilitating salary sacrifice to obtain it, generally, it's not to a third party. It's via the employer scheme. Now, if it was in the name of the individual and was truly private to a third party, it wouldn't be salary sacrifice. It would just be a deduction anyway. So third party deductions don't reduce national minimum wage. Hopefully that makes sense and I haven't confused. So in any effect, if an employer collects money to buy something from a third party external to the employment, union fees, membership of some sort of organisation, fine. But if it's a payment to something that's provided as a benefit by the employer or an employer scheme, there's a problem, because the provision is the employer, even if delivered by a third party, and that's where the money ends up. It's just a suggestion.
Thank you, Simon. Okay, thank you, appreciate it. Okay, so moving through to new gaps consultation. I don't know if anyone wanted to pick this up.
Well, yeah, it's interesting, isn't it? You want to go, Richard, on this?
Well, as I said, the consultations on the two new ones commenced on the 19th of March. I guess the ethnicity is one that has been churning along for a number of years, to the point that they've got to the three sort of different options that they were going to look at before it's evaporated. But they're both pay, as far as I'm aware. So basically the second and third, and it will be the same rules as pay gap, where it will be that 250 or more employee areas. I guess the key thing with the ethnicity, from what I saw, and I may have read it wrong, Simon, is the reporting is not only going to be the gap, but also your percentages of return and non-return. Because obviously it's not a requirement to collect ethnicity or whatever they classify ethnicity to be. It is certainly an individual choice, where obviously pay isn't comparatively. So I believe that it will incorporate, and I'm guessing the disability too, the ratio percentage of data held on individuals. Because you may only have 20% of your staff knowledge on 20% of your staff, and it could be a certain location or a certain place, which could therefore massively slew the percentage against your actual full demographic. So I believe it will be obviously quite different, therefore, to what is currently collected under gender. But we don't know the detail of how.
There's still some elements I'm thinking need to be settled, as you're saying, Richard, because the public sector, private sector for gender pay gap, the dates are actually different. Is that going to be the case with this ethnicity and disability as well?
Okay, so I've seen the fact that it won't be, it'll be the same.
Yes.
So the date, the what do you call it? Not the hot date, the
trigger date, is that?
Yeah, the critical date will be the same as it is for gender pay gap. I have seen that twice.
So that would align to the public sector 31st of March versus the private sector. The interesting thing about the geographical scope is that the devolved employer on public sector are currently not part of it. So it's interesting that this is all large private voluntary sector employers in Great Britain. That's England, Wales and Scotland, so it's not Northern Ireland. Large public sector bodies in England and certain public authorities operating across Great Britain. So I presume if they've got an element of England involved with them, it goes across the lot. But if they're Welsh government or Scottish government only, that's an ongoing discussion because that's considered a devolved, but only for public sector, not private. So private is across Great Britain. So it's interesting how all these little nuances of layered legislation start to interfere with some of these things, which make our heads explode a bit as we figure out how we're going to do this and where certain employer types fall. But interesting times. The consultations, I think, open till June, is it, from memory? So there is opportunity for employers to get involved and respond and tell them what your opinions are. I'm going to say, with the information that we are being required on worked hours, hopefully the consultation and the pressure there was, don't be so ridiculous, it isn't information that we've got to return, and it was canned in the end. I'm not saying that that's the intention here, but I think it's an element of public opinion does count towards influencing how well something goes ahead and whether it does or doesn't and in what matter. And so it's important to have your voice heard.
Yeah, and I think what's also very important for employers, outside of the new ones, is within the new employment bill, there is addressing gender pay gap for large employers as part of its remit. So I think they're looking very closely at, I guess, driving employers to have a way of showing how they are addressing it. And that's in the bill, which is coming at some point. So,
Said Ashley
Yes.
Dorman's coming. Ashley Dorman's coming. I think it's hi Ashley. In addition to the current statutory gender pay gap, we already voluntarily report on ethnicity, disability, and sexuality pay gaps.
Very good.
Mic drop. Mic drop from Ashley at the near towards the end. Yeah.
very well done.
Yeah, I think that's looking forward, isn't it, and looking ahead, and a number of organisations do, which is great. The remarkable thing I tend to find at the moment is we don't really hear much about the gender pay gap. So we heard about it when it first came in a little bit, but it seems to have gone a bit quiet. The remarkable thing also was a number of employers would return saying that they had no gender pay gap, which was interesting. So they chose statistics of zeros as well across it, whereas that's virtually impossible to achieve. So there's an element of who are you fooling? Now, there may have been circumstances where they were, but the proportion of people that are saying there was no gender pay gap was sort of, you haven't done the maths.
Fantastic. Okay, and yes, nice to hear from you, Ashley. It has been a while. Okay, so mindful of time, we have one area of discussion left. So being an utter completist, that would be great if we could get through that as well. And this is the tax advice market, April 2026. Government announced
Push it right. Oh, sorry, that way.
What's that,
I think
Richard?
my hands go the right way. There we go.
You're passing that one across. Yeah, so the government are progressing the tax advice market proposals that they had. At one point, that was by having to a compulsory measure of being part of a professional body. I think that's gone. I don't think they're proposing that necessarily, although professional bodies do monitor the tax advice market. But we've had a recent case, I think, there was a Leicester payroll company that scarpered off with the money. There's obviously the naming and shaming list, I'll call it that, of tax avoidance schemes, which has gone over 150, probably even 170 organisations being named that are doing tax avoidance. Substantial number of those are umbrella companies. Saying that, there'll be another 100 that are doing it perfectly correctly, but I think it was found to be, from government information, 70% of the umbrella market was actually involved in tax avoidance. So I think there's an element of be careful, but we've all been tarred with the same brush as payroll professionals. So potentially, if we're offering payroll services to third parties, and that can be in-house payroll teams who are dealing also with franchisees, partners or neighbouring businesses because they've got spare capacity, that we may find ourselves in a mandation for registration in the tax advice market in the services we provide from April 2026. So I think that's part of what this discussion is about. So there'll be some further consultation and registration requirements, which then also bring into play potential requirements for anti-money laundering registration and due diligence on clients, risk assessments, etc. But the tightening of the tax advice market was really to tackle the avoidance companies and also the repayment agencies that have been out there claiming marriage tax allowance, expense reclaims, etc., where the individuals end up with about 20 quid and the repayment companies run off with the hundreds or thousands even of other stuff, or the private individual never sees any of the money because the assignment of the monies has gone to a third party who has disappeared. Of course, HMRC have stopped all of that. So they've stopped paying to third parties in that way that was fairly prevalent up to a couple of years ago. But as a result, we have this element of modernising and mandating tax advisor registration coming into play from April 2026. Wait for further announcements. I don't know how that feels or impacts, and I don't know, Robert, Margaret, you may say, well, you're already governed by those sorts of arenas anyway, and registration. I myself tried it 6 years ago now. I registered as a tax advisor formally with HMRC and have that, but there'll be lots of payroll professionals that don't, and payroll organisations that are not currently registered as tax advisor, and they're not part of the Institute of Chartered Accountants England Wales or Institute of Chartered whatever, because there isn't a payroll regulatory body at this point in time. But the proposal is, I think, for a centralised HMRC registration of tax advisors, so that they have a control of what those advisors do. They abide by a code and could potentially close them down if they're not playing the game.
Amazing. Anyone else? Anything to add on that one? I think we're closing in on time, so thank you so much, Simon. That was great. Just quickly, if there was anything else anyone wanted to add with any questions or any hot topics that we haven't covered. We don't have much time, but I don't know if, guys, if you had anything you wanted to raise that you've noticed in the last month.
Yeah, the only thing I'd probably say is we had the employer bulletin. Was it out last week or the week before? I can't remember. Recently, the employer bulletin mentioned how to operate PAYE on the proportion of globally mobile employees' income and changes to overseas workday relief. So we'll have been familiar, if we've got international employees, of former schemes that were in operation. All those prior registrations and approvals are cancelled. They all stopped, and there's new methods of applying. So these are things like Section 690, offset foreign tax, things like that, workday offsets, etc. There is a new application process. Now, the challenge we used to have with these is you used to officially have to wait for the approvals to come through before you could operate them. On the new method, you don't. You just have to have an acceptance of the application, and then you can immediately operate on the basis that it may be approved. And then you have to deal with the fact it is or isn't at a future point. So in some ways, the new regime is a benefit to us if we've got internationally mobile employees, etc., secondees, blah, 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 that are coming in. So just to make you aware, look at the employer bulletin on new process for Section 690 application.
Brilliant. Thank you, Simon. Anything else from anyone else? Because I think we're closing in on time. But no, I just want to say then it's a huge thank you from me for everyone here on the panel, and obviously everyone who's joined us as well. It was a pleasure to do it. Just wanted to say thank you very much, Simon Parsons, Director of UK Compliance at SD Worx, Richard George, Director of Education at the Learn Centre, Margaret Selmer, Senior Payroll Manager at S&W, and Robert Day, Associate Director at S&W. Really has been a pleasure. Make sure you put this in your diaries, guys. So Thursday, 22nd of May, obviously sign up at sdworx.co.uk/PQT. It's been really good. Thank you ever so much. Pleasure to meet everyone, see people that I hadn't seen for a while, get messages from people that I haven't seen for ages. Ashley, beer in the city maybe. And yeah, hopefully see you all again very soon. Thank you very much, guys.
Great weekend. Been a pleasure, Steve. Appreciate it.
Have a lovely weekend, guys. Thank you.
Thank you for having me. Bye-bye.
Thanks. Bye.